Hi everyone, welcome back to the Wild Wolf Financial Team. This is Jim, your financial analyst in gold. Today is December 21st. It is Monday, and we have entered the first trading day of the week. Now let's start with the main topic. The major figure of $1,900 an ounce was accomplished by the bulls. Now, the positive gap opening, as we can see here, was an opening of 45 pips, of around 45 pips. So that is how the market opened today. Based on the hourly chart, we can see that there was a gap of 45 pips. Gold prices closed at $1,881 and opened up at $1,885. So, moving on, the ongoing stimulus talks have put pressure on the US dollar, and the biggest influence on gold prices was the lack of progress towards a new US COVID-19 relief package. The main reason of the gap was because senators have reached an agreement on a roughly $900 billion coronavirus relief package, which was announced by Majority Leader McConnell. The pattern has been pretty simple this month. Gold prices have risen on positive headlines on stimulus, and gold has pulled back when headlines signaled a setback. The stimulus news has clearly set the short-term tone. So moving on, the precious metals bullish trend all started from this bullish pennant here that was based on December the 15th. Now, we can see that this is where the bullish momentum first started. Now, several pullbacks occurred as sellers tried to drag prices back into its previous range. But stimulus talks, COVID-19 vaccine, Brexit trade talks, and economic stats all favored the bulls. And we now come to understand how strong of a role the stimulus package plays on supporting this precious metal at this stage in time. Now, from a fundamental point of view, today is a quiet day based on the economic calendar. So there is currently no market moving data to be released, so this is something to consider, even though the market also is based on technical analysis. So moving on, but due to the economic data that I've mentioned earlier on, the market may still fluctuate, so it is still advised to stick to your strict stop loss. Now, the bullish candle at 9 a.m. GMT plus 8 breached the resistance level, pushing it up to the major figure of 1900. So as we can see here, this candle here, it moved on in a bullish direction, and this is where the major figure was broken. Moving on, so the major currencies have had an impact on the market today, thus creating panic. So as we can see here, when it's reached the $1,900 an ounce, we can see that there is a very strong bearish movement, which has plunged the gold value by 50 points. So this basically creates panic, and this benefits the intraday traders. Meanwhile, GBP, the Great British Pound, crashed, causing panic. As you can see here, you can see a very strong bearish movement, and this is what has happened. The bearish candle on 3 p.m. GMT plus 8, this is where the crash has had an impact on this precious metal. So the negative impact on gold has plunged it down 50 points, as I mentioned earlier. And moving on to the next point is that the big players got involved. So when the big players got involved, they continued in dragging the precious metal lower with aggressive selling. So as you can see here, the prices have plunged down to as low as 1860s. So as we can see here, it's come down to as low as 1854. So this is something to consider because of the whole panic buying situation, and traders were not expecting prices to fall despite following its bullish direction. So nonetheless, we have seen the prices plunge down to as low as that. So the rebound happened here. So we can see a rebound that did rebound into correction. So this is still in process because the bulls did not want the prices to come down to its previous range. That was last week. So the bulls are constantly trying to bring it back up. And despite having no economic data to have an impact on the currencies and the precious metal, we can see that at the moment the precious metal is rising. It is trying to go back to the major figure. Now, the bears basically, at this point in time, the bears have already received their Christmas gift. So I believe they are very happy at this point in time here in this plunge. Moving on now, just a quick recap of what happened in the situation. Now, President-elect Joe Biden is expected to increase further government spending for this and also for other reasons. Now, there is a risk that inflation under Biden's presidency could be higher than under Trump's. Now, this would be great news for gold. Let's face it, Biden won't have an easy presidency, and I'm not referring to the fact that he will be sworn in as the oldest president in the US history, or that he will have to deal with the coronavirus pandemic and the process of vaccine distribution across the country. I'm referring to Biden inheriting an economy with slow growth and too much public debt. So, given the debt burden, it should be clear that under Biden's presidency, real interest rates will remain at ultra low levels. This is how a debt trap usually works. The more the debt grows, the less the economy, in other words, the Treasury, can afford higher interest rates. Moreover, Biden will have to face the risk of inflation. So this is something to consider, and on the one of the factors that can have an effect on this precious metal. So gold, moving on. So gold currently is in the positive zone, and we can see that the bulls are trying to push the prices back up at this area, and the resistance level is currently at $1930 an ounce, while the support is sitting at $1850 an ounce. And from the previous support, just the other day, it was 1875. So we can see that the prices have shot up from this time, and therefore the levels have changed. Now, moving on, I would like to also advise now at this current time, it is very risky to place an order. So I would advise to avoid from buying and selling at this point in time. So please do wait for the right moment to enter. And to all our traders and to all our members who are registered with us, we do send out signals at the right time. So please make sure to follow us to not miss that right time to enter the market. This way we can all enjoy the profits all together. And just before I like to end my show, I would like to thank everyone for watching my video. Please do not forget to subscribe so we can keep you updated on a daily basis. And we do explain our videos in 2 points, that is the technical analysis and the fundamental analysis. So please do keep updated. We will keep you posted soon on a daily basis. And please also do not forget to give us a thumbs up.